Hello everyone, how's it going? In this video, we're trying to understand NIO, whether it's a good company to invest or not. We're looking at both the bull case and the bear case scenario. Number one, it is a founder-led company. William Lee, who's running the company right now, he founded the company and has a very good tech background. Basically, when a founder runs the company, he's vested in the company more than anything. He thinks the company like a baby for himself, and there's no other priorities other than the company himself. Now, the next thing, the company CEO owns about more than 10%, about close to 10, 11%. So William Lee himself runs the company and he owns 10 to 11% of the company, which means the people who are running the company have their skin in the game. That's where you can see that your interest and their interest are aligning in the same direction. Next, NIO is in that Chinese EV vehicle growth sector that's happening right now. The Chinese central government are trying to push EV vehicles into the market, and they have a huge mandate that's going on in this direction. This has been going on since 2014, 2015, and right then, Chinese has been looking into that on the forefront across the world. But that's a very good aspect. And basically, NIO is enjoying that growth coming from China themselves. Now, let's look into the valuation perspective. NIO is sitting at about $40.50. It had a very rocky slide over the past 2 years. A very interesting stock to look into. And it's one of the most popular stocks out there. It's sitting at about 62 billion market cap, and that's the most important number for ourselves. The number is important because you are purchasing the company, or if you had about $62 billion, you could buy this company right off the bat at the moment. $62 billion, and what's the return that you're getting out of this company? The revenue is about 9.8 billion quarterly, and on an annual basis, you're getting about 16 billion in revenue. There's no net income, there's no profit going on. So it'll take some time for you to get your money back. But what's the amount of time and what's the amount of years that you're ready to wait in order to get your money back? That's the question you want to ask yourself. Next is looking at the safety margin. This is a simple bridge example, and this is from the construction aspect. When you're constructing a bridge, you understand what kind of load it's going to carry on that bridge. And say there's a maximum load of 10,000 pounds that's going to travel on the bridge. You don't build a bridge that's going to carry 10,000 pounds. You build a bridge which its maximum going to carry about 30,000 pounds. So that's the margin of safety which they consider in construction and many other projects. This is the risk-taking capacity basically. So if by mistake or if for some reason there's a tank which is going to cross this bridge, it could still load that low amount of weight on it and it can still survive the weight. That's the margin of safety you want to consider in investing as well. And here, what's the margin of safety? What will happen if something happens and suddenly EV sector is no longer profitable in the company in the world? China is no longer promoting EV. For all of a sudden, they realize that electricity is worse and it's even more problematic to the climate. And there's something else that came up in the market, and everyone jumps onto that. What will happen with these stocks? What will happen with these companies? Right now, everyone loves NIO. Everyone loves the EV sector. But tomorrow, there'll be a new technology that will come up, and everyone will jump onto that technology. You have seen what's happening with crypto. Everyone loves crypto and people are jumping onto the crypto. That'll happen with any other technology. A year, 2 years, 5 years from now, things will change and the mindset will change. And what will happen to companies like this? And that's the safety margin you want to look into. Next is this is a growing company, so they'll be constantly diluting their shares. So looking at the amount of outstanding shares, right now it's sitting at about 1.6 billion shares, and they've been selling shares like anything. And that's where you can think about it. The company itself doesn't think that the valuation of the company is right at the mark, and they think that the valuation the market is giving them, the market is loving them. So they're just selling out shares so that they can fund their own research and development and growth. Now, this is the largest automakers by market capitalization. And you can see Tesla sitting at about $1.7 trillion. And right on the rank 2 is $257 billion, Toyota. And look at the amount of vehicles that they each produce. Tesla itself, it has some good numbers to show for itself. The other EV companies like NIO, Lucid, Rivian, they have no numbers to show, but still they are hosting these big market cap valuations. Toyota, which is hosting about $293 billion, it sells about 2.5 million vehicles per quarter. But that's not even the amount of vehicles that Tesla sells in an annual basis. Yeah, it's not even close to 1 million vehicles in an annual basis, whereas Toyota and Ford and other companies, they're close to 2.5 million just on a quarterly basis. Now you might say, hey, EV is in a very growth sector. It's going to grow like anything. It's going to expand like anything. But what's the justification for that? How much big it can become? You're already purchasing, and it's not just you. Everyone else is thinking that the company has been. It's a big growth aspect. It would have been smart if you saw NIO coming 2 or 3 years ago, even before anyone caught up on that EV craze. That would have made sense. But right now, everyone knows that EV vehicles are the future, and we should be looking into EV vehicles. Look into this company, Rivian. It's hosting at about $131 billion. It doesn't have any, it just IPO'd, and doesn't have any revenue coming in. Same thing with Lucid right here. Same thing with some things. I mean, you can see what's happening with NIO right now. That's the valuation that's happening in the market. Everyone loves that EV craze and everyone is jumping on it. But again, I could be wrong. I could be very negative in these thinking. Do your own research. Try to understand from your angle. Try to give it a more neutral thought. Don't listen to all this noise that's going on. Think from your own perspective. Think that you have $62 billion and whether it's a very hard-earned money that you paid for. Will you buy a company like NIO? And if you, as a whole, as an owner for that company. So think from that perspective. With that, take care, stay safe. Bye-bye.